Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's check out some aggressive growth stock pick choices with Bill Wilton, who peruses the list of aggressive growth stocks that he wants to bring to your attention each week here on Zacks.com. There's a couple of interesting ones this time around. Einstein Noah Restaurant Group. You probably recognize them as Einstein Bagels, right?
Correct. They also have a couple other brands that they market themselves under, the New York Bagel, or Noah's New York Bagel, and Manhattan Bagel, as well as one or two other ones.
Okay.
They do have some company-owned locations, but they also do licensing and franchising, as a source to expand their footprint, which is actually one of their goals right now. They're aggressively expanding, despite the soft consumer market that we're seeing, which is very interesting. But it gives them a great leg up when things do turn around. They'll be even more prevalent.
They're expanding with restaurants?
Correct.
Because they wholesale to stores too, to grocery stores.
But their actual aggressive expansion that they're going after right now is opening up more locations.
I see.
They're hoping to be at about 700 by year's end.
That is aggressive.
So they just released quarterly results on August 6th. They did see revenue dip slightly, less than 1%, but their operating margins went up by 430 basis points to 19.2%. So they actually ended up earning more this year. Despite the decrease in revenue, earnings per share came in at 39 cents versus the Zacks consensus estimate, which was 23 cents. And after that, we saw the analysts upwardly revise their revisions. Full year estimates for this year are now $1.14, up from $1.05, which is actually a step down year over year. But they're expected to rebound just as much next year, earning $1.34 versus $1.29, which was the estimate before the latest earnings announcement. Shares are trading at a pretty decent value. You can get one share will cost you about 12.5 times forward earnings. PEG ratio is under 1.0, so you're getting that growth at a reasonable price, which is something that really helps out when I'm looking at a stock. And here you can see that investors had an excellent response to that earnings announcement that I mentioned before. Shares were up, and a lot of times you will see a big spike on a positive surprise like that, only to crash back down. But here you can see the increased volume to keep the shares elevated there. So it should be a very excellent play going forward.
All right, and recently you also wrote about Priceline.com, the web-based travel service that lets people pay what they want to pay for hotels and airfare.
Yep, and it's a very beneficial service. You're looking for hotels who have increasing numbers of vacant rooms, as this soft consumer market was continuing to get worse. Now it's debatable on where it's going, but they're able to book these rooms, granted not at full price. Consumers are able to take a vacation that they may not have been able to afford before, so you're just meeting each other halfway. Bookings were actually up 13% last quarter. They reported on August 10th. Revenues were up 18%. Earnings per share came in at $1.81, which was 19 cents higher than the Zacks consensus. And this is actually the fourth straight quarter that Priceline has booked a double-digit earnings surprise, which that caught me off guard because I would think that they'd be struggling a little bit more, but they're actually doing very well with their discount pricing method.
That's that pay what you want to pay concept.
Exactly. They're maintaining their number one Zacks rank, and they've got solid growth. Year over year, we're looking at about 31% this year if estimates are met, with another 18% coming in 2010. And just like Einstein's before, they've had a very good response to their latest quarterly earnings report, and it looks like they're even establishing a new trading range here with two levels that could turn into resistance and support, as you can see on the chart there.
I think we should do that with everything. Just pay what you want to pay. Negotiate it all out.
It's fine with me.
Right? You're for that. Do you own either of these two?
I do not.
All right. If you want to check out the text versions of these two stock stories or some others that Bill has written about recently, go to our homepage, Zacks.com, and the aggressive growth category in the upper right-hand corner of the website is where you can link to the most current story that Bill has written about, story stock, and then an archive of some others. Just click on that link. It's a live link. It'll take you right to all of that text information. With Bill Wilton I'm Terry Ruffalo.